Let's discuss the real estate sector, one of the top performing sectors so far of the year. Mr. Vivek Rathi, Director Research, Knight Frank India, and Parth Chhajer, the promoter at Arihant Superstructures, joins us on the show now. Good afternoon, gentlemen. Thank you so much for making time and speaking with us. Vivek, just wanted to begin by discussing the latest report that you have released. Does it give you any sort of indication that there's a bit of a plateauing of demand and FY24 is not going to be as stellar as FY23 was?
Yeah, very pertinent question. Considering we're coming out of the pandemic experience of the last 3 years, where after a complete shutdown during the pandemic, where people were not able to move, we saw the housing market particularly growing by leaps and bounds. The growth rates in 2021 was almost 50% on sales in the top 8 cities. It came down to about 30-35% in 2022, and this year what we're expecting is similar levels of sales. We still identify it as an indication of a robust market, considering the market has maintained the scales that it achieved in the last year and a half. So on that account, yes, the growth rates would be expectedly be lower compared to the past 2 years, but the market is maintaining the high scales, which is something to look forward to.
Parth, Arihant Superstructures, the company which you're representing, it is creating quite a flutter among market men. A lot of fund managers and strategists we are speaking to are talking about your company, especially in light of what work you're doing in Navi Mumbai. Talk to us about what kind of trends are you witnessing on ground with your own work is concerned. Why would you go and buy outright big parcels of land? You must be seeing good demand going forward.
Yes, so in the last 3 years, we've seen very good demand, growing demand every month across the entire segment. And we bought this new 76-acre land, complete outright purchase, very close to Hirandani Fortune City at Panvel. So this Navi Mumbai region, as per se, is going to be a very good growth center for the next decade. We see good participation by the leading institutes and the leading corporates with respect to housing, with respect to commercial, with respect to warehousing, hospitality. So across these all segments, there's a good growth chart lined up because the infrastructure projects which have been announced for a long time are maturing now and nearing completion. We can see that the MTHL is due to get opened up by December of 2023. So that will be a very, very big game changer, which will ease the travel from South Mumbai to Navi Mumbai International Airport in just 30 minutes. And the Panvel and the other regions would be slightly more, like 45 minutes. So then that's why we acquired the new 76 acres, which is going to be at a distance of 75 minutes from the new Trans Harbour Link, from South Mumbai.
Okay, point taken. Vivek, Parth, of course, represents wherein they have more exposure towards the affordable or the mid segment. But the trend that we're watching out for is the fact that the premium, the luxury, and that's been leading the market growth. Do you see that continuing this year as well, or even the mid and the affordable categories bouncing back sharply?
So certainly the mid and the premium segment. So when in the last 3 years, when the resurgence on housing demand was seen in the market, all of the segments participated in the same intensity. But then, as we came ahead with increasing home loan interest rates and property prices, it's the affordable housing segment which went slower. And what we see is mid and the premium segment buyers continuing with their purchase intentions. In the next 1 to 2 years, what we expect is this is likely to continue because the purchase ability for consumers in the mid and premium segment is relatively in a better shape. And therefore, that kind of becomes a key reason why developers are also focusing on the mid and premium segment. So the market, which is between say 50 lakhs to 1 CR, house values, and even beyond the 1 CR segment, we've seen some of the developers in many of these key markets witnessing a fabulous launch response, selling most of their inventory in a matter of a few days. And this was seen particularly in the premium segment categories of house values more than 5 CR. So we think the consumer as well as the developer enthusiasm for mid and premium segment is going to continue. For the affordable housing segment, we have to wait for some more catalysts, including the cut in home loan interest rates as we go ahead.
To that point, we have seen that in the last 18 months, despite of higher rates, the volumes have remained quite buoyant almost in every category. They were completely agnostic to rates at the premium end. If in the next 18 months, when the rate cut cycle starts, how are various purchaser categories likely to react? Do you think this can only increase or improve the volume which we have seen?
So, in terms of, sorry.
I'll just come to you, on that as well, but I want Vivek's opinion first.
Sure. So, very valid question. Considering in the last 4 months since the status quo on the MPC, RBI's MPC outcome, we've seen fair amount of stability even in consumer sentiments because now they have a better sense in terms of how to prepare their financials towards purchase of a home, EMI, and other factors, right? Consumers are really waiting for a turn of interest rate cycle, whether it happens in the next 6 months or 12 months. But whenever that happens, we expect the lower and mid segments to respond the most, followed by the premium segment. And the key reason for that is the dependence on mortgage is the most significant in the lower income segments. Whereas when it comes to the mid premium segment, there are many equity buyers or cash buyers, which kind of translates into a relatively moderate impact of change in interest rate cycles in those segments.
Right, Parth, come in now on that one. How do you see your own volumes? Because for a developer who also resorts to some kind of borrowings for their projects at their own balance sheet level, and plus the volumes get impacted if cost of ownership goes through a change. So if cost of ownership via interest rates goes down in the next 18-20 months, and your borrowing cost, I don't know how much debt you have, but if for a developer, then what kind of additional boost does the business get?
Yes, so once the cost of ownership with respect to the interest rates decrease, which is likely to happen starting January 2024, we'll see a better response with respect to the buyers' sentiments that are there especially in the affordable housing segment, which is 50 lakhs and below. But today also, even in the last 1 year, we've seen the rate hikes go from like 4%, the repo rate changing to 6.5% today. Despite that also, the end users, the real consumers, decided to buy their house today because they also know that the interest rate is a 10 to 12 year cycle with respect to their home loans. So there will be ups and downs across the entire tenure of their home loans. So people have that acceptance that it will go up and come down again. But for them, it is more important to buy their dream house, take the ownership of the apartment today, wherein they were getting it, they are getting it at a good price even today. So the affordability is still there in the segment, even after the increase in input costs. But due to the increase in FSI, there's been a decrease in the land cost relating to more volumes as well as more sales across all the segments in MMR region.
Thanks, gentlemen, for joining us on the show. Parth as well as Vivek, really appreciate your thoughts regarding the entire real estate cycle and where we are.